Hey, Dustin Tibbetts, financial advisor here with Jazz Wealth Managers. How you doing today? I got a bum finger, so it might make some noise. Sorry about that. Hey, when you do your taxes, it seems like the IRS always wants you to tell you everything about your life. Well, you mostly do if it has to do with money, but they don't need to know every little detail, actually. You actually don't need to list your Roth IRA contributions for the most part. So we're going to explain a little bit here today. So Roth money is considered after-tax money, meaning you put the money in after you've already paid taxes, and then the benefit is it gets to grow tax-free as long as you take it out after age 59 and a half. So because you're already putting money away that has been taxed already, the IRS really doesn't care unless you want the savers credit. So if you're trying to get the savers credit, then you want to report any contribution that you make, and I'll explain. So I'm going to try to zoom in here. There we go. So if you're married filing jointly, right, the savers credit basically just gives you a credit for the lower to sort of moderate income people out there. And what it is as much as 50%, I know I jumped around a little bit there, or up to $4,000 if you're married filing jointly. So here's the catch. If you're married filing jointly and you make less than $39,500, I believe it is, for 2021, then whatever dollars that you put into a Roth IRA or an IRA, you'll get a 50% credit for that, right? So here's the example. Let's say you are married filing jointly and you qualify. Let's say you put in $3,000 in your Roth, your wife puts in $3,000 in hers, you've got a total of $6,000, you would get a 50% credit for that. Hopefully you can see it there perfectly there. Now, if you make more than $39,500, it goes like this. You get a 50% credit. So in this case, it would be $3,000. It's a credit, by the way. That's not a deduction or anything. That's an actual credit. So you got 50% there. If you start to make over $39,000, then it goes down to a 20% credit and then down to a 10% credit. And I think it's anything over an adjusted gross income of $66,000 or so. I'll try to pull it up. Anything over $66,000, you actually you won't get any credit. So then you wouldn't have to report the Roth IRA contributions there. So that kind of thing you'd want to put on your tax return when you fill it out, your 1040, when you're doing your taxes. Otherwise, if you're not in that camp, you really don't need to put it on there. You actually won't get a form from your brokerage firm or whoever has your Roth IRA unless you took money out or you broke one of the rules. If you just put money in normally throughout the year and saved up, you won't get any kind of form that says what you did or anything. You just, Scout's honor if you're going to report it to the IRS because they don't care. You've already paid the tax, so no big deal there. So yeah, that's pretty much it. Just want to let you know, no need to stress out about that. If you're going to do your taxes and you go, hey, I don't know how much I put in my Roth, unless you're looking for that savers credit, it really doesn't matter. So there you go. Enjoy the rest of your day. If I helped you in some way, hit the subscribe button. We're trying to get to 100,000 subscribers. I don't know why it makes a difference, but it'd be cool to see the number there. So I thank you for supporting us, and see you soon.